All right, good morning, good afternoon. It's Trendy John from Simpler Trading. Hope everyone's doing well. This is my weekly update on my Tesla position. So far with Tesla, it was a nice rally from the demand zone. And looking back, most likely, and this is easy to say in hindsight, is like, hey, I should have just bought at my green zone and not what I call the sweet spot. So let's go ahead and remove the sweet spot because it wasn't that sweet. I had to endure a little bit of pain, but the question is, can we continue up here? So this total position was down thousands, and now it's back to basically break even, not quite there. It's almost like the market knows exactly where I got in, right? Doesn't it like feel like that sometimes? I think so. So, anyways, you guys all know my average price here is 193.80. But you can see that the demand zone worked really well. I did a little bit of fun, went out on X and found a lot of traders last the week before, death cross this and death cross that, and the Darth Vader cross. I don't know. There's a lot of stuff going on, a lot of talk, and my big thing that I always wanted to remind everybody is, well, first, I'm not out of the clear. Obviously, I'm not even like profitable yet on this position, and this is supposed to be a really long-term trade. However, this is a great reminder, all right, to understand that when you have demand zones, all right, they're on the bottom side, guys. So demand zones are on the bottom, right? And you have supply zones at the top. And it's always the same thing. Bad news just keeps on piling on as price enters a demand zone. And I always say this: how many indicators tell you to buy when prices are moving to the downside? None. Demand and supply is the best edge you could find in the market, hands down. I don't care what anybody says. All the other indicators are moving indicators and they help you, but when it comes to demand and supply, there's not many that tell you, hey, this is the time to be buying. All right. And you can see here in the chart, we come down into the demand zone. We start to push to the upside here. And I mean, that's a nice little move from 174 all the way into 193. It's about $10. And looking back, I should be up 2,500, not flat at this point. Now, the question is, are we going to continue up here? This one's, like I said, it's not like this is a beautiful chart yet. Matter of fact, it could still be a death cross or whatever, and we could still head all the way down here to 125, like I was talking about in my previous video. So, what were my emotions this week coming into this trade? Well, it was looking kind of ugly there, and I remember one morning I had woke up, and it was probably this day right here when we hit that low, and I was thinking once again, wow, I told my wife, I'm gonna have to get used to this. Like I was down like a couple grand, and it wasn't about the money per se. It's more about the mindset. So me being a day trader coming in and thinking to myself, like, I just want to trade, have a good time. You got to wake up and face the noise when you're sitting in shares, right? Because pre-market, you're going to see that you're down. If you're in options, you just know when the market opens if you're going to be down or not. Whereas in like this case, you know right away. So you open your eyeballs, you see that you're down, and it's like, man, is my day going to get worse, or how are things going to pan out here? So yeah, I wasn't feeling too great on this day. I thought, man, here we are again. Tesla's being a butthole, and but I started to see a little bit of life in it. And once Tuesday rolled in, and we started to close up, over the previous day's, close, I was like, there might be something here. Then I got really relaxed. I understood like demand started working, and then I started to think, well, we have all these levels in front of us. We have the cloud that's in front of us. It's not going to be easy. So I really tried not to pay attention to the PL at all during this week. I just knew when I was up that it would probably come back down, and when I was down, I was thinking it would probably go back up. It's just it a lot of support and resistance in this area. So we're just basically chopping, if you will. We closed up 2%, and that's great. And when I really dissect and get into the candles on a daily, there's nothing too significant here that I'm pumped up about yet. So let's take a look on the weekly. What I want to see is that we start to create what's called an inside and up formation from the demand zone, whether it be on a quarterly, a weekly, or something like that. So let's head over to the weekly position. This is where I get excited. So we had the inside candle that formed the previous week, and then we flushed this low. So a lot of traders, all right, were probably placing their lows here, trying to stay in for the grind. This guy said, this is what we call a flush low. Flush low came in, took everyone's stops out, and this is really common. And this is why I highly encourage you to learn how to trade supply and demand, because that won't happen to you in the future. Well, sometimes it could happen to you, but most of the time, if you understand you're at a demand zone, you do not want to get stopped out in demand zone. There's nothing more humiliating than putting your stop in a demand zone. And most retail traders do it. It's not until you learn about supply and demand that you're like, okay, now I can be better than that. So notice we get the flush low, and now we close on this very nice inside and up formation. But again, it's not over. All right. Like, what do we need from a weekly standpoint? I need prices to take out this pivot high of 196. I need this trendy edge up here to get tested. And most likely, what you're going to see, and I'll go ahead and draw it out, is, if the market kind of gaps up tonight, ES, NASDAQ, or whatever, most likely Tesla gaps up into this previous high over here. Okay, so right there. And then maybe we pull back a little bit. I do not want to see, okay, I do not want to see this week close under 618 of this past week. All right. And that 618 comes in at around 182. All right. I don't want to see that this next coming week. What I'd like to see is that price can stay above 38 to 38.2% of this week's candle. So at around 186, that gives us a nice little pull if it happens. But I want to stay above that because the 38.2 and 23.6 are a bullish channel of a measured move. Okay. So if we could stay above there, things are great. The next level that I'm really interested in is if we can get over the pivot high. So this should actually come up right there. And I want to know if we can get above that 196.35. If we do that and I get a message on my phone or here on the computer, then I just know, hey, we took out the high. And, is as volatile as Tesla has been to the downside, I would expect traders to try and sell off there. But if for some reason buyers show up there, then I think we're definitely making that attempt back up towards 200 to 205 this week. All right. So again, this is what I'd be expecting. Now, I also would expect that, oh, if the stock guys are listening and this thing really gets super bullish, I would expect a really big sell off around the 213 to 215 area. Couple reasons why we have big selling candle here. So we know selling pressure is there. You could tell by the nice big red candle. We have topping wicks. We have a cloud. There's just a lot of energy there to the downside. Now, let's go ahead and measure with some Fibonacci from the pivot high to the pivot low. And I bet, okay, I could be wrong, but I bet right in here is a major Fibonacci level. So we're going to have a lot of confluence there that says, hey, don't get too ahead of your skis. So let's go down. And boom, just like that, it is the 38.2. Now, the way that I teach, again, any measured move where I'm anchoring my fibs, this case, this measured move is a downtrend. So we reverse the Fibonacci's. 23 and 38 are to the downside. The 23 and the 38.2 of a downtrend is the bearish channel. And I teach this is where you're looking to get short. So again, now we have the 38.2. We have the cloud, we have topping wicks, and we have a nice sell-off candle here. And if you like volume, you'd probably see some volume behind that move down, right? So again, a lot of confluence here. I think a major, if you're short, major pain would be up towards 213, 212 to 215. If you're long, that's just where I'm telling you where we could see more of a pullback, if you will. And for some reason, all right, that I'm wrong, and I hope I'm wrong because I'm long, but price explodes through that level, then you could see 220 to 230 in the next couple weeks. The big move, again, if I can get to 245 and hit this supply zone, before earnings, I'll probably end up taking some of my position off and then adding back in when we pull back. So it look like this. I want to hold all the way up to here. All right. For me to be a supply and demand trader and not take some off in an actual supply zone, seems a little crazy, you know what I mean? So I have to take some of the position off. And then what I would do is I would measure my Fibonacci's from here to the place where we start to pull back. I'd find the 23.6 to 38.2, the bullish channel of this move, and then I would add in again from there. Okay, so that way I get a little bit, just I get a little bit more. And again, my mind can change. It's my position, right? Anything can change. If for some reason I'm just feeling it and we can close above here this week and this cloud then wraps around, I may actually wait for price to pull back to the cloud and then add into the trade, come up here and then take those ads that I add here and take them off in the supply zone. So that's obviously something I could do as well. Now, I will tell you, I sold some calls against my position once early in the week, made some money, closed it real quick, and then I sold let me see real quick. And again, these are covered calls, right? And I sold the 205. Okay. So I sold the 205s against my position here. So I'm not anticipating. I mean, it would be beautiful to me. I shouldn't say I'm not anticipating from if I were anticipating this move from demand, I would expect it to move up possibly into 210. Okay. So there's a possibility that I'm wrong, right? We'll see. These are already up though, I believe. Um, I just looking for premium to burn out of them, and then I'll cover the profits on that as well. But I don't expect, unless there's a big catalyst, for Tesla to get over and stay over 210 this week. Okay. Like I said, doesn't mean that we can't push into here, but I think we settle here, somewhere in there. All right. Now, again, obviously, I'm bullish. If I'm pleasantly surprised, that's okay. But this is my analysis for right now. I hope you guys appreciate it. And if you're a Tesla fan, don't forget to give this a like and share with other people who might be wondering what's happening with Tesla and so forth. I think this could definitely help them out. You guys have a wonderful day. We'll see you soon, and I'll follow up every day with you.